What's good, guys? So I want to talk about the process that I go through before I take trades, and like the entry criteria I have, the checks that I need to check off basically before I get into something. And then this is a big reason why I have a good win rate. And then also another reason why I'm cash a decent amount of days because I need to check off a fair amount of boxes before I get into something. I'm not just gonna jump right into a trade. Um, but basically, the first thing, it starts off pre-market. So before the market even opens, I'm setting myself up for success in a way. I'm having the trades that I'm looking for already planned out. So this way, I'm not scrambling when a stock is moving into one of my levels, um, since I'll already have it planned out pre-market. Um, so the first thing is determining a key level to trade. So I'll go through my watch list of stocks. I'll see what stocks are at good breakout levels or something like that. Um, and then I'll also look at which stocks are a better grade setup or a less good setup than others. And then the very last thing in that, I guess, or a couple things, I guess. So, how is the stock moving in correlation to futures? So, is my stock up while futures are down? And then now the actual last thing is how strong or how weak is this stock? Is it just slowly getting to a key level? Is it like very strong into the key level? Did it have like a huge move last night or yesterday? Something like that. So that's the first thing I look at is pre-market. I'll find the key levels that I'm looking to trade, and then I'll set like a hierarchy. If I, want to explain it like that. So basically, let's say I have three trades, that I'm all willing to take. I'm gonna basically have it listed in order of which is the best setup, versus which is the least good. They're all gonna be good since I'm writing it down and I'm willing to trade it. But for example, one might be an A grade setup versus the third one might be a B or a B minus or something like that. So I'll kind of have an idea of what I want to see, um, and the stocks that I'm most willing to trade for the day. If I don't have a plan pre market for the trade, I'm going to have to make a plan before I get into the trade. Um, so if I see a stock just quickly shooting up, I'm not going to just switch to the stock, open an option, and get in right away. I'm going to have to do some analysis first, um, before I jump into a trade. So, with the pre market thing, finding key levels, one of the important things with that is I'm going to have to see what the stock has room to. So, let's say one stock has a resistance close to that breakout level. So, let's say it breaks out, it has 50 cents of room, and then that's like my first profit target since that's what it has room to, versus another stock might have $3 of room. So that's something to keep in mind. Obviously, every stock is different. So, for example, Nvidia is trading at $574 versus AMD is trading at 163. So a dollar on AMD is going to pay a lot different than a dollar on Nvidia. But it is still important to see, what it has room to, like what every setup has room to, so you can set your profit targets. And then also knowing if that room is realistic in a trade. So I scalp, so I'm in and out relatively quick. If my room on AMD is a $10 move, that's not really feasible for a scalp. Even if Nvidia room was $10, that's not likely, to happen in one clean move. That can be two separate trades or something like that. But regardless of that, so part of the pre-market charting is going to be finding what trades have room to. I'm going to drop a whole video on finding profit targets, so I'm not going to get too in depth with it. But basically, key levels, trend lines, psychological levels, things like that are going to be what helps me determine what a trade has room to, and then also knowing what the average move is on any particular stock. So for Nvidia, I'll know like generally what an average move is, a high probability move is. If I were to trade a stock I don't normally trade, like Broadcom, that might be a little harder for me to determine. But I can still chart and figure things out and then read momentum. But having a target pre-market when you're not into the trade, or you're not in the trade, whatever, it's gonna help you, stay clear-minded while you're in the trade, to know what you want to see, basically. So that's the second thing I look at pre-market. The last thing, which will really be more clear when the market's actually open, is going to be what is a good place to set my stop loss. The reason that's a little more clear to see when the market opens is because you want to see how candles react at certain levels when the market's actually open. If you're charting your stop loss pre-market, it's going to be a little bit harder. I don't really know how to explain it, but it'll make more sense, or for me at least, it makes more sense reading the pre-market or the price action when the market's actually open, not pre-market, and gauging momentum while the market's actually trading. So that, I will have an idea, since I'm going to have my profit target, what my stop loss is going to be, but it's really going to be determined when the market's open. But having a decent idea for that is going to be a good thing to do, especially if you're not really too good at identifying where to have a stop loss. Then it is good to have an idea pre-market in case if your trade happens in the first minute or two or five even, to just know. It could even be like, I'm going to stop out at 10%, and then my target is going to be this price, and if you know that if it hits your target it might be 20% or something like that, then that's solid. But yeah, so that's pre-market, what I look for. So I'm going to have the stocks that I'm watching for the day. If those trades don't play out, that's fine, and I'll just be cash on the day. If a trade is setting up during the day, I'm gonna have to do all those things. So I'm gonna have to determine the key level. That's basically what I'm gonna be trading. I'm gonna have to find out what the stock has room to have a profit target. If I don't have a profit target, I'm not gonna take the trade, because I'll pretty much be going into a blind, and I personally don't like that. I like to have targets. It just helps me have a clearer mind when I'm in the trade. And then stop loss, that's pretty easy for me to determine, so I could do that on the fly. The next thing is, you could do this pre-market in a way, but it'll have to be like right before open. But it's gonna be, how do I want to see the stock approach my entry level in order to get in? So what I mean by that is basically, if the stock, let's go with Nvidia. If Nvidia has a $7 move into my key level, I'm not going to take it. I'm going to wait for a pullback, and then take the retest. For example, maybe we're really close right off open. I'm going to have to make the decision if I want to play a move straight into my level, or if I want to take a red to green candle, or if I just want to skip it and wait for it to actually set up for me. So the approach is going to be something that I'm going to have in mind, and it's good to do this because there are going to be a lot of times where your key level hits, but it's not really worth the trade because the approach into that level was not clean, and it's not gonna realistically hit your profit target based on that approach. So the example I gave with Nvidia, if I had a $7 move into your key level and then your profit target was another $2, that's a $9 straight move. In that example with no pullback, that's not highly likely to happen. It can happen, but if your stock has a pullback and then it comes back in with good momentum and everything you want to see, then it pushing that $2 is much more likely, since that first move is extended or it's an exhausted move, however you would want to look at it. So the approach into the level is something I'm thinking about before I get into the trade. So basically the notes I wrote were, will I take a straight drop or straight push into my level, or do I need a bounce before an entry? And then one of the last things that I'm looking at is going to be, what do I not want to see? So for example, maybe, I mean, to go with the last thing, maybe I don't want to see a straight push into the level. Another thing could be, maybe I don't want to see this trade or this level, hit without good momentum. So maybe I want to see strong candles into that level. Another thing could be volume. Maybe you want to see volume picking up into that level. Another thing could be futures. You want to see futures on your side during this trade. So note the things that you don't want to see. It'll help you determine whether the trade is likely to happen or not. And part of that, I guess, noting the red flags that are in the trade before you get in is going to help you see if the trade is really going to play out or not if you're getting into the trade. So for example, let's say Nvidia is coming up to 575 and I get in, but the only red flag is that futures are not moving with your stock, or whatever. So now let's say futures are moving down and you're looking at Nvidia upside. You already know the red flag before you get into the trade. So since you know that red flag, you're going to be focused on that a little bit more. So if it is the reason that the trade doesn't work, then it'll be pretty obvious to you why the trade's not going to work, and it'll help you cut the trade quickly. Now, if the red flag gets lifted or whatever, and now futures have a move in your favor, then that's great. In that example, you're already in the trade, so now you have even more working for you. Now let's say it flips back and then futures have a strong drop again, and then it kind of pulls Nvidia with it, then you know that going into the trade that this was a big red flag, something to watch out for. But if that's the only thing, then it might not be enough for you to completely skip the trade. So you might still take the trade knowing that that is a potential weight being held on the trade. But I guess one more thing that I just thought of, I want to see which contracts are going to be the best to trade. So I think I have a whole video on that. So I want to see like the volume and the spread and things like that. But that's pretty much it. That's what I look for before I get into trades. So most of this is happening pre-market. Really the only things that are happening on the fly is going to be, where's a good stop loss? That happens before I hit the button. This is all before I get into the trade. Where's my stop loss going to be? When I determine that, I want to make sure the stock approaches my entry level how I want it to. But yeah, that's pretty much it, I think. I wrote down some notes. So yeah, I mean, that's pretty much what I look for before I get into trades. And having a set of rules like this makes it a lot easier for you to stick to your plan. If you don't plan out your trades, it's going to be a lot harder as a trader because you're going to be scrambling around all the time versus if you say there's these 3 trades for the day, just for example, 3. These are all worth trading. Trade number 1 is much better than trade number 3, but trade number 3 is still worth an amount of risk. So trade number 1 might be full size, trade number 3 might be half size, for example. So pre-market, you know what you're looking for and what you want to trade, how the stock approaches your level, and the different things that you're looking out for. And also having profit target helps you stay patient during the trade, allow the trade to play out, and give you a best case scenario of what you want to see. And also having profit targets helps your win rate because if your targets are realistic, then they're going to hit a lot more. But if you're just holding and praying that it just keeps going up, there's a chance that you should have sold before you were praying that it keeps going up, and what should have been a green trade would have been a red trade just because you weren't approaching or looking at it the right way. So yeah, that's pretty much all I have to say for this video. So this is what I do every morning pre-market basically. But I hope you guys like this video. I have a whole lot of topics that I have written on my phone for video ideas. So I'm thinking about doing like 1 a week, something like that. But yeah, hopefully you guys like the video. See you guys soon. Peace.